All right, good morning, everyone. Let's keep going. All right. U.S. markets had a nice solid session on Friday, just up over 1% on the S&Ps. You can see we really closed at the highs there. Every sector in the green except for utilities, which was obviously the big defensive. We had the June jobs report numbers, which really beat expectations by significantly. I think what's important is that not only did it beat significantly on the month of June, which was a beat of 35,000 if I'm not mistaken, but we also had a nice beat on the revision for the prior month, which is also a beat of about 20,000 on the prior number. So just a really, really good jobs number. You saw the gold price and all the other commodity prices really sell off on the back of that. You saw commodity currencies that got hit pretty hard. Anyway, so really all everything looking pretty good there for the most part. We saw Goldman Sachs also that brought forward their call for Fed tapering to September, and it kind of looks like a consensus is this year now between a lot of the major investment banks after Friday's number. They're expecting the purchases to be reduced to 65 billion from 85 billion in September. All right, if you look into Asia, really shocking session out of Asia considering we had a nice strong day out of the U.S. You can see there Hong Kong was down close to 2%. Japan was down a little less than 1%. Australia was down a little less than 1%. Just across the board, every single market in the red. So very a little bit concerning there. Even on the back of U.S. numbers, and it kind of almost seems like people, the money was coming out of some of the other countries and maybe is still going into the U.S. Where that's where the people feel like there's actually growth going forward. Chinese banking stocks really what led the declines. And continue to have concerns over the shadow banking system there, and that governments won't ease policy despite the slow growth. So I think it's really important. We're also watching bond yields kind of everywhere continue to climb on the back of U.S. Treasuries that are also running, or yields at least are running. And I think that's going to continue to kind of drive markets over the next few sessions. We had corporate action today. We've got Alcoa kicking off the U.S. earnings season after the bell. We always know that Alcoa is the first one. I think this is going to be a really interesting earnings season. I know I mentioned it a couple times in the past week or so, but we've seen more negative revisions on U.S. earnings, and U.S. is where people feel like things are going best. More negative earnings revision on U.S. earnings in about 20 years for any quarter. So I think that is really, really important. But you got to remember that mostly is probably in the price. So just keep that in mind. We've got a really interesting earnings season that's going to come up. I mean, there's a real opportunity to surprise to the upside potentially. And I think that could give us a little bit more legs. Don't forget we got XDiv today out of Tungart. We've got a couple broker upgrades today. We had Aspen, which is upgraded to 259 Rand from 148 Rand to HSBC. Thanks for the late notice there, boys. We've got Adcock, which is price is raised to 73.5 from 69, also at HSBC. And then Amplatz, about 6,000 workers are striking at the Thimbalini shaft. So the bad news continues for the mining sector here locally. All right, and then market data out today. We had current account numbers out of Japan, which were a little light. We also have trade balance and industrial production numbers out of Germany today, but that's it. So really light day in data today. Just be careful out there today. I know the markets finished exceptionally weak on Friday. We could see a little bit of a carryover for that, spillover for that coming forward. We'll just monitor that accordingly today. All right, let's jump into the maps. All right. First thing I wanted to have a look at is actually the U.S. 10-year. And we're going to actually show a 10-year chart. I showed this a few sessions back, and I'll show it again. The reason why is because we're actually breaking out now. You can see there, we're breaking out from quite a long downtrend in the yields on the 10-year. Whether you draw it from the very tip of the wicks, still not managing to hold itself under there today. So we finally, as of on Friday, after the non-farm payroll numbers, we got a break above this trendline resistance on the 10-year Treasuries, and that's at just north of 2.7%, which is quite a pitiful yield. But we had yields at under 1.5%. So this has been a hell of a move over the last the last month and a half, maybe 2 months. We've moved down from around 1.5 all the way up to 2.7. So this is big, and I think the market's screaming at us that we've got a bit of a change happening here, which has been happening for a while, but I think it's going to continue to go on for a little bit longer. All right, let's look at the S&P. S&P. I'm not going to look at 10-year here. We'll just look at the year. I'll just show here. We're really, as of the close, the last couple of sessions, we're testing right at trendline resistance there on the S&Ps. We've got a beautiful little flag pattern here, but we got to see if this thing can break out of the session or not. We had a little head fake there a couple weeks ago, and then we've come right back up to test trendline resistance. We need to watch this one really closely. If we can get another push, if we can get a little push through here, I think we could have legs on this rally. But be careful. Doesn't necessarily mean all the rest of the markets are going to go. ABSA, I'll just jump into 2-year here. Actually shorten it up a little bit just to kind of get the point across. You can see here, really, this 135 level, how significant it is. We did get down below here, I think, on one close back in September of last year. And then you can see how many times we touched this 135 level. I mean, right on the nose. We also got down here twice in June. On intraday, we closed up around 136. We closed at 138 on Friday. It wouldn't be any surprise whatsoever if we got down and tested it this morning. So watch the 135 level in ABSA. I think it can be bought over the next day or two. All right, Kumba. We've shown this chart a few times. I just don't want guys to miss this. Right here at 435, you can see here closing lows. We tried to make a bounce off of this the last couple weeks. Just really hasn't been able to get going. And if we get a close below 435, it's good night nurse for this thing. I think this thing can trade below 350 if we drop 435 and Kumba. That's a hell of a long ways from here. All right, Naspers we show as well. We've also been showing this one quite a bit, but you guys can see there kind of potential of formation of a double top. If we don't get above 760 today, if we get to 760 today and we can't punch through 760, when I say punch through, you can't get through it by more than a rand 50, which is kind of what it did all day on Friday. I really think that we could fail from here and have a significant correction from here in Naspers. So, monitor that one closely. We'll have a look at Cecil. We also talked about, this level a few times at 420. You can really put this level in all the way down to 417, but you can see the significance of it. The top of this range here, we tested it here to the downside, held. We did break through for a few sessions back in late June, and then we've really rallied nicely, but the kind of bottom end of this range has been somewhere between 417 and 420. I like the play of this with a stop maybe below these wicks that were down around 409. End of last month. Okay, and then the last one I'm going to show here is Amplats. Amplats really putting in a little inverse cup and handle here, which is, I think, really set up to potentially go quite a bit lower. You can see here, the bounce that we were able to get off of this, the previous lows, which are at about 270, call it 270. Well, I think it was here actually. The lows at 279. We took it out for one day. We bounced above it and just kind of barely held above it for a few sessions. We're already retesting it. That previous breakdown, which was at 279, we closed right at 279.78 on Friday. I think if we trade lower than this and take out my thoughts on this would be to take out this low. If you can take out the low going back to, I think it's the 26th of June, the closing low at 274. I think we'll start to see this thing accelerate to the downside and could probably trade down to around 230, 240 on implants. And that's it for today, guys. Thanks a lot.